Happy bull market. Good to see you. What's up, Christian? Good afternoon, Joanna. Hello, Tom, Jim. What's up, Nick? Oriel. Good to see you guys. Josh, hello. Hello, Josh. Good to see you, Josh. Oh, man. Uvixi Bull. That's a tough one. It's a tough name to have right now. Stonks. Dimitri, what's going on, man? I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here is mainly the same. I got out of BYON. I got into and out of BYON. I don't remember if that was on the disclosure yesterday or not. I got out of it. All right, so Carvana's out. Carvana's moving higher here initially. Big short float in that one. Fourth quarter retail vehicle unit sales, 76,000, just under estimates. Fourth quarter revenue, 2.42 billion, estimate of 2.55 billion, so that's a miss. Adjusted EBITDA margins, a little bit of a beat, 2.5%. Estimates 2.05%. Carvana fourth quarter adjusted EBITDA beats 60 million versus 58.6 million. These numbers just look okay, but stock's trading up on it. It's trading up big on it, up 21% here after hours. Funny, I was just thinking as we're looking at this Carvana right now that this market is interesting because one of the hallmarks that we've seen of some of the recent kind of tops, it doesn't always happen this way, but in the last couple of years we've seen it happen fairly often before bigger pullbacks, is that they eventually do start really running all these short squeeze growth stocks, and that has not happened this time around. You definitely have a little bit of an uptick in a lot of growth stocks over the course of the last several months, but it's nothing like any sort of real squeeze here. It's just this market is controlled by a few specific companies. Yeah, they haven't rallied the trash at all. They haven't rallied a lot of things. There's a lot of things that are not participating in this rally. Pretty much anything that's not AI. So we have Square out, or Block, or whatever they call it. Square trading up. Fourth quarter gross payment volume misses estimates. Subscription services revenue beats by a little bit. Cash app monthly transaction activities in line. Q1 adjusted EBITDA 570 million to 590 million versus estimates. That's pretty good, of 514 million. So solid beat there on their forecast for the first quarter adjusted EBITDA. Operating income, Q1 operating income guidance range is also a solid beat. And gross profit is in line. But it seems like those guidance numbers are pretty good for Square. Should getting a good uptick on that. Yeah, Rock saying it's much healthier when the market rallies because one company gains $250 billion in market cap in a trading day. Let's be fair. I think it was only 244 billion there, Rock. No need to exaggerate the number. Let's make sure that the YouTube is running properly because yesterday I had an echo in there for the first 5 minutes or so. Oh, it's 277 billion? Oh, never mind. Sorry, I thought it was less than that. It's an Intel and a half. The video went up by an Intel and a half today. Yeah, this market is a really, really wild tape right here. All right, so how did we close at the end of the day? The SPY is up 2%. The Qs are up 2.8%. And they're down a little bit since the market actually closed. And the IWM is up 0.75%. That's a decent day for the Russell. Russell's up 0.75%, but it feels like it's up nothing because the Qs are up 3% today. Just a sick move. Going over to the charts, so we did discuss the possibility that there could be still, this morning at the open, a sell the news event. The market was gapping up really big. NVIDIA was obviously gapping up huge. And there's almost no way to know how NVIDIA was going to be interpreted today, to be honest. It's very hard to put your finger on exactly what those whisper numbers looked like. And if the market, which is very long, especially very long, those types of stocks, would use this as an opportunity to kind of sell the news or not. So there was a chance that this market could sell off this morning. That chance, I think, was very much out the window by like 11:30, 12 o'clock, which is pretty late in the day. But it was really by that point that the 15-minute chart had fully satisfied its extension. I remember when I got off the radio, and I think I might have typed into the radio, into the chat a little bit later, but it was like, we got this little peak here at 10:35 in the market. We got this little pullback in equilibrium. You know, what we were saying in the morning was the 5-minute chart extension, the SPYs and Qs, is going to be massive, but the 5-minute chart was so extended that it took until 10:30. It's pretty rare. Because it was a time correction, not a price correction. It took basically until 10:30 for the 5-minute chart to not be extended, but by 10:30 the 5-minute chart's not important, it's the 15-minute chart, and there was a lot of extension there. So I remember communicating to everyone that this little breakout on the 5-minute chart in the market at 10:25 was probably going to be a false breakout because it's 10:30 and there's so much extension on the 15. And usually that's exactly what you see. And that's why time of day and knowing your time frames in conjunction with time of day is so important. If you see that the 5-minute chart is trying to give you a breakout at 10:30 and there's no real market news, and you could argue that there was market news today with NVIDIA, if you have a 5-minute breakout that's attempting to occur after like 10:15 to 10:30 and you still have a lot of 15-minute chart extension, there is it's very difficult for that market to give continuation at that time. So that was pretty spot on call. This did turn out to be a little mini false breakout here, right? We tried to break higher, we failed, and the market kind of began its 15-minute correction. But like I was saying when I got off the radio, it's looking more like a time correction than a price correction. And once that time correction was done, once this 21 EMA caught up, once the 80 EMA on the 15 caught up, which again took a very long time, you're probably looking at like 11:30 to 12 o'clock by the time that happened. Once that happened, there's just nothing out there for the bears to hang their hat on at that point. Definitely a chance off the open. You know, maybe there could be a 15-minute upside squeeze or something like that. Definitely a chance off the open that the market could have sold off. But once you lost the extension and it was entirely through time and not through price, which is the most bullish way that a market can correct, what do you have if you're trying to be bearish on this market to hang your hat on? You've got nothing. You got nothing. The market here is super bullish. Higher highs and higher lows across the board. We had thought maybe this was a technical signal here, like I would describe it as kind of like a yellow warning light. You know, not a red light that you shouldn't drive through, but like a yellow warning light. Like, be cautious, be careful. We have a lower high, and positioning information is getting a little bit extreme, and it's as we're getting out of OPEX. But what do we know about getting out of that OPEX period is that it loosens the market up in potentially either direction, and that we discussed could be up if the trend holds and NVIDIA's report is good. And NVIDIA's report, we talked about it in real time after hours, and then again this morning, was objectively phenomenal. The report is phenomenal. I mean, they beat on every metric. The numbers were huge, but it was kind of like the analyst portion of Pat's note from this morning, which I mentioned this morning because obviously I read it. I hope everybody read it. NVIDIA beats handily. Is it enough? And I really feel like there was kind of no way to know how the market was going to react to these obviously incredible numbers. And it was just a matter of if the market was going to use this as an opportunity to kind of sell the news anyway, just because positioning is so strong, or if those numbers would be considered so phenomenal that it just leads to the next leg of the rally. And basically what we discussed is pay attention to these previous pivot highs. Because if the market is able to hold above this 503.50, it's confirming the higher high within the confines of this uptrend, and it's just totally on for the bulls. And it's the same thing. Now, where do you get the confirmation in that big time frame? You get it on a small time frame. If we couldn't sell off early, if we couldn't price correct early, sell the news early, again, fine. You want to give me an opening 15-minute momentum pop, whatever, that can happen. But if we're not like really price correcting at 10 a.m. plus and kind of making lows and rolling down, and they're not selling the news in NVIDIA, then the market said, you know what, these numbers are so phenomenal that even as expensive as we've made this stock, and as much as we're all chasing price in it, we can chase price further, and the analysts can chase price further. And again, you know, there is nothing in that NVIDIA report that is bearish in any way. It's just a matter of, and we see this happen a lot, when a stock has a really big move into an earnings report, oftentimes we see good numbers are not good enough. I feel very, very confident that if NVIDIA's numbers were in line, that the stock would have been down a decent chunk today. And even if the numbers were able to beat by a little bit, maybe it would have been flat on the day or something like that. You needed extraordinary numbers to get NVIDIA to move the way that it did, and the numbers were extraordinary. It's a breakaway gap. NVIDIA gapped above that previous resistance. It was a huge gap higher, and it just continued. And the market, like I've been saying, the trend is intact, and once we were not able to get back below and hold back below that 503.50, once the 15-minute chart was no longer extended, so you didn't have the possibility of an opening profit-taking sell-off to get you back below levels, and the market using the extension as an opportunity to sell. Once you get through that point, you know, by 11:30 today, when you had no extension on the 15-minute chart, there is no reason to think anything except bullishness for this market. And we know, again, that there is still a degree of positioning out there where buying leads to more buying. There still is a capacity for this market to be able to squeeze higher, and that's exactly what we're seeing. And the trend is your friend, and the trend is higher. So you know that's why, even though I have felt over the course of the last week plus that there is growing evidence that the market could run out of steam, what I've been saying every single time I've been trying to communicate that is, however, the uptrend is still intact. And if you're trying to be bearish on this market, you have to recognize that the uptrend is intact. And that's why I am, in whatever I'm in. I'm in 14 long positions and 1 short. Granted, that short position is large. I'm very large in that TQQQ, kind of off of that thesis, and it's mainly been protecting me. And honestly, even with this move in the Qs today, I'm still positive on my QQQ short. And it's like I said, I think yesterday morning, that QQQ short is acting as a little bit of a hedge. And when there's kind of these other more macro thought process worries that are out there that are concerning me a bit for the market, I want to keep that position on, and I'm willing to give back every penny that I've made in it, and that's fine, because if I'm giving back every penny that I'm making in it, hopefully the 13, 14 long positions that I'm in are continuing to pay me. Little bit of a struggle sometimes, though, when it's just a couple of stocks that are moving the market so much, and that the Qs are probably going to be up today significantly more than almost any stock that you look at, unless you're specifically looking at a few names, because only a few names that are ripping this market higher. But that's kind of the thought process. Respect the trend. Respect the trend. The Q's very, very nearly lost that trend over the course of the last couple of days, and we said that NVIDIA is potentially a turning point in either way for the market, because you had the Q's here just battling the last couple of days on losing on a closing basis the potential pivot low from February 13th. And if you lose that, well, you're losing the uptrend in the market. And then all of a sudden, when you're losing the uptrend in the market, all the data that we're seeing about how, like, in some ways the risk is to the downside. Like if you look at the CTA flows from Pat's note yesterday that we discussed, the 1 month flows out. I don't remember what the numbers are offhand, but there's buying in a flat tape, buying in an up tape, and selling in a down tape. But the selling in the down tape is significantly more than what the buying is in the up tape. So what does that tell you? Well, it tells you that the market is very bullish, that the trend is still intact. If we are able to move higher, that there is still more ammo for buying to lead to more buying in the market. But if you were to lose this trend at a certain point, it can actually lead to a much deeper pullback very quickly. And it's something that I think, with an understanding of that data, made a lot of sense to be prepared for. Be prepared for, while again recognizing the bullishness of this market. The trend is your friend, and a big important part about trading that I've learned for a long time ago is that trends tend to last for much longer than people expect that they will. And then Pat here, when he was quoting the Bank of America guy, who I guess focuses on the bull bear indicator that they have, which is approaching a sell signal. Also has a great quote in here that I think is worth rereading. We're not quite there yet, Harnett remarked, adding that investors mustn't forget the old market adage that says, tops are a process, lows are a moment. Human nature means fear is so much easier to reverse than greed. And yeah, 100% agree with that. And we're still not even at that point yet where that Bank of America indicator is giving you a contra sell signal. So there is absolutely ammo for this market to move higher. NVIDIA further confirmed it. It appropriately probably boosted the other semiconductor names outside of NVIDIA. It appropriately probably boosted like your Microsofts of the world, which we know is like the #1 customer or top 5 customer of NVIDIA. And it's just an incredible move, and that's pretty much all there is to say about that. Some of the data that is out there I do still think is concerning, and it's starting to hit that point. But that point where we actually see a real pullback for the market, that could be a month or two from now. You could see the same trend that we've seen throughout January or February last for another month easily. We might be approaching mid-March in the same way that we approached mid-February. At a certain point, if the market's able to get through the rest of February unscathed, because this back half of February historically, and I always take seasonality with a grain of salt, but the last 2 weeks in February I think are historically the most bearish two week period of time of the calendar year, and that happens a lot of times for market structure reasons. You get through this February OPEX like what just happened, and it could potentially loosen the market up. And I guess a lot of times historically that's happened to the downside, but it can also happen to the upside. So if we can't sell in the back half of February here, well, by the time we're in the beginning of March, you go right back to more of that positive gamma environment that helps to insulate the market again. And once again, if you're a bear out there, you really just don't have anything to hang your hat on with this market. There is no signal at all right now, after the SPYs cleared new highs today, to continue their uptrend, and the Qs just about got there. There's pretty much no signal at all that this market should be able to go down. And if all you're hanging your hat on is weak seasonality in the last 2 weeks of February, okay, fine, but you're certainly off to a bad start for that based on what this price action is looking like. And again, once you get into the beginning of March, if you don't have a pullback by the beginning of March, it's going to be very hard to have a pullback in that first half of March. And then it might at a certain point become the same question mid-March as we had mid-February about, all right, well, now we're through options X, and we're rolling off some gamma, and the market can loosen up in the second half of March. And if the market wants to go down because of interest rates or Fed or whatever, then all of a sudden it could potentially happen again. So we'll see. It's very hard to be bearish right now. I think that the only thing that you can try to do on the bear side of the market at this point is to short large extension if it were to come in. I think our extension rules are still intact. They still apply. So if you start seeing the SPYs and the Qs getting $10 away from the ADMA on the daily chart, that's a signal to potentially go counter to the market. And it's been a very consistent signal over the course of the last couple of years. It's pretty much at 100% success rate, as long as you're willing to build into the position and recognize that $10 of extension at certain points can be $12 or even $14 worth of extension. It's pretty much at 100% success rate, which isn't to say that it always will, by the way. That can change. But unless you're looking at like extreme upside extension for the market, there is no real reason to think that you should be trying to short the market at this point. We're just way too strong. The trend is fully intact, and NVIDIA was a complete and utter blowout. So we'll obviously continue to monitor the situation. There is also becoming an increasing probability actually now of the market really beginning to give a blow off top or a parabolic move, which has not happened at all. The uptrend that we've been in has been very steady. The fastest portion of it was in November, but once you got through the first half of November, second half of November, December, January, February so far have been very nice, clean uptrends, pattern of higher highs and higher lows. No real parabolic nature to this market. We haven't even really gotten $10 of extended in the SPYs in a very long time. And the Qs, I think we got a little bit of that at a certain point where we were getting there. I think maybe at this point in January, maybe we were there on February 12th. Let me see. February 12th, we were 439. Yeah, even there, it was only $8 worth of extension at highs. So we've never really gotten that extreme extension actually in some months. So yeah, again, if you're trying to think to the short side of the market right now, you got to be very careful. The only ways I would be thinking about that is either we're hitting those extreme extension points, we go parabolic and the VIX is moving up with it, or somehow for some reason, like in a very short period of time, the market fully negates this up move that happened today. If we really can get below those same levels I talked about, which is basically today's low and this 503.50, maybe at that point you can begin to start to bring back a bear thesis, and you don't want to try to pick top in the market ever, really, right? You want to, and that's why I never pick points for reversals. I pick points for retracements, and maybe those retracements can become reversals. You want to pay attention to all the evidence that's out there that can show you sort of what part of the bull market we're in, what inning we're in as far as this market continuing on the upside. And there is some evidence, I do think, again, when you're looking at the positioning information, that would say that we're getting a little bit late in the ball game. But like I was just saying, if this market wants to continue here while we're looser in the back half of February, there's no reason for it to pull back in the beginning of March. And it could be a month or 2 months before you're looking at any sort of appreciable pullback. And at that point, we could be at 530 in the SPYs, and you're trying to short from 505 all the way up because you think that the market is up too much, or you don't believe in the AI story or whatever. You just got to be very, very careful on the counter trend movements always, and you want to be very, very strategical and surgical when you are trying to go counter trend, whether that's short in an uptrend or long in a downtrend, because otherwise you can hurt yourself. And that's been the consistent game plan. It's been the consistent game plan to really only short extension, and it's only been in the last few weeks because we started to see some of these warning signs, both technically and in terms of our positioning and flow information, that has signaled, hey, maybe instead of being 1,000% long this market, you should try to run a little bit more of a hedged book and be long short. But without a doubt, this uptrend is still very much fully intact. I think that pretty much covers what I have. I don't really have too much to talk about from the individual stock perspective. I did try to short NVIDIA at one point off the up pre-market versus 765. It was actually a really good trade. I got a $20 pullback in my favor by the time the market opened, and was able to cover some risk on it and then stop myself out, because I don't want to be short NVIDIA if it's getting through the spot of my stop loss and there's momentum and it's breaking higher. So that was a cute little trade there, and then everything else is just looking at SMCI back to $1,000 at one point today, just totally crazy. Was ARM getting hit after hours? Oh, ARM was much weaker today. I didn't realize that, and still selling down a little bit after hours. More or less held that resistance today. So yeah, that's pretty much all I got. I am happy to take a look at whatever you guys have and any questions you guys have. So scrolling up and looking here in the VTF. I think the first thing I'm seeing is Dave here, aka Uvixi Bull, giving us our update on the NASDAQ versus the Russell comparison here, and just showing just the continued outperformance of the NASDAQ. Impressive. And it's, just led by a few stocks. But I'd be very careful with your thought process there, that the NASDAQ is way too strong for this to not be a disaster. There are plenty of other times in history where the market has been led by relatively few stocks and it did not lead to disaster. And it can lead that way for a very long time. I think even if you go back to the 1960s or whatever, when the Nifty 50 was a thing, I actually think that concentration in the best stocks at that period of time was even more than it is now overall, actually. And that lasted for like 10 years or so, I think, before it finally switched. I'm not a perfect market historian on that, but I think that's roughly in line with the information. So I would be very cautious in saying that, this move has to lead to disaster. I would feel that way a little bit more if I saw the SPYs and Qs actually going parabolic on their daily chart, and maybe that's beginning to happen now, maybe, but it's certainly not there yet. We're not parabolic at all. Show me the U.S. market do what the Chinese market did in 2015, and then you got a problem. And obviously this was so extreme that you'll probably never see this with the U.S. market, but it was into this degree of a parabolic move. Just typing up the Asher here, ASHR, to view the Chinese market. It was this degree of a parabolic move that showed that there was a problem. And we haven't had anything like this period here that started March 16th and went to June 15th. So it's like a 3-month period here where this ETF went from $38 to $55. And again, it's an index basically. Show me, it doesn't have to be this extreme, but show me the beginning, show me this parabolic move actually come into the index. Show me the VIX going up with it. Then I'll agree with you that the move in the market is too strong for it to not end up being I still don't like the word disaster, but a bigger problem. And we're just, we're not at that point yet. All the Qs did was get back to highs that they were at, a few weeks ago, because they had a bigger pullback here since the CPI and PPI. From Bullish Feeling, what kind of numbers would NVIDIA have had to produce for you to be more bullish on the market in NVIDIA? Well, I think the numbers that they had. So you knew, or at least I feel really confident that The only way that NVIDIA was going to be able to go higher on their report is if they had a very significant beat. They had a very significant beat. I just had no idea at all whether or not the market was going to interpret that significant beat as enough. And it goes back to exactly what I said before when I quoted the quote here from Heisenberg from Pat's report. NVIDIA beats handily. Is it enough? And if you read this entire thing, and I encourage you to do so if you didn't, I certainly did pre-market. It's a very important part of my research process. It basically goes through exactly what I'm talking about. The numbers are phenomenal. The numbers are phenomenal, like objectively phenomenal. And it's just a matter of, well, that's incredibly good. Is the market going to sell the news or not? And I think that's as bullish of a thought process as I could ever have at this point. If the numbers are even better than that, I probably would have said the same thing. Numbers are phenomenal. Let's see if they sell the news or not, because the move into it is so big. And like I said earlier, a lot of times when you have a big move into an earnings report, which NVIDIA certainly did. Look at this run in 2024 so far. It's kind of insane. $470 to $800 now. A lot of times when you have a big run into an earnings report, good is not good enough. You need to be great. You need to be excellent. And those numbers were great. They were excellent. But was it great enough? And I had no idea the answer to that. I felt that trying a short in NVIDIA this morning was worth it from a risk-reward perspective, as long as I was willing to very quickly stop myself out and move on if it was breaking up. And that's exactly what I did. Because I don't know if this thing is going to actually sell the news or not. But I know that there is a seller at $765 on the tape pre-market. And if I can be short versus that seller, and if it's a sell the news event, in my case, I think I had like $2.50 of risk or something like that on the short. I was able to be $20 in the money in like a very short period of time. It could have been significantly more than that. But if it's actually breaking up, I got to get the hell out of the way, because that means that the market's interpreting it in a bullish fashion. So that was incredible. And for me to be more bullish on the market, I think I am very bullish on the market overall because of what the trend is. I think that it's more of a question of what can make me more bearish on the market at this point. And it has to do with us going parabolic, or positioning and sentiment becoming a little bit more extreme than they currently are, or us being very extended in combination with that. So I do still think that there are some yellow warning signals that are out there. Honestly, one of the best ways that would also get me more bullish about the market is if it actually pulled back. If we had a more significant pullback in the market that helped to satisfy all this stuff, and then I would get more bullish again. But that's kind of far end on a different cycle or a different timeline than we're on currently. So I think I am pretty bullish on this market actually, and it's more of a question on this point on where do I not want to be bullish anymore. From Nick. Are there times of the day where you pay more attention to the 5-minute chart than the 15-minute chart, right around the open and close? Yeah, the 5-minute chart until like 10:15 to 10:30. The 5-minute chart's the most important time frame for me, and then starting at like 10:15 to 10:30, the 15-minute chart becomes significantly more important. Midday is kind of whatever for me. I don't do a ton of trading around 12, 1 o'clock. I don't think it's a good time of the day to be trading. And then into the close, yeah, back on the smaller time frame a little bit. But for me, I don't do a lot of new trade initiations at the end of the day, because I feel like the amount of time I have until the market closes limits my reward and hinders my risk-reward ratios. So for me, the end of the day is more about positioning myself on what I want my swing portfolio to look like overnight than anything else. So I spend a lot of time starting at specifically 3:42 p.m. Eastern. I give myself 18 minutes each day to go through my entire portfolio, every position that I'm in, figure out what I want to take off before the market's gonna close. Update some Excel spreadsheets to kind of remind me where I am on my positions, and then by that point the market's about to close. It takes me, 10 to 15 minutes. I like to give myself a extra couple minute cushion there because you never know what's going to happen. The AT&T outage only affects sellers today. Apparently. From Bill K. The big events on the horizon the options market is looking out for is the March 15th quarterly OPEX and the March 20th interest rate announcement. The futures market is pricing in a 94.2% chance of no hike. Yeah, for sure. For sure. And that's why I'm saying, like, I feel like when we get towards mid-March, we'll be having potentially, if the market is still holding up, which at this point it's safe to assume that it probably will be, that we'll probably be having similar conversations as we had coming into mid-February of this month, except quarterly OPEX in March, so it's potentially even stronger. From Eli, throughout your career of trading, have you seen the market be led by such few names? Yes. My career in trading has mostly been similar but different to what we've been seeing in a lot of ways. What year was the FANG acronym founded? I'm actually genuinely curious to know about that. If I had to guess, I would guess 2014, 2013 maybe. I'm trying to Google it. If anybody can beat me to that. Somebody should ask ChatGPT. 2013. Jim Cramer. Everybody hates on Jim Cramer. CNBC personality Jim Cramer is credited with coming up with the original FANG acronym back in 2013 when he recommended 4 high-growth tech stocks: Facebook, Amazon, Netflix, and Google. Everybody wants to hate on Jim Cramer all the time, and I get it a little bit, but who's hating on Jim Cramer if they bought FANG when he came up with FANG in 2013? I don't know. I think that the market is too mean on a lot of these people. It's very hard to be a TV personality. But yeah, FANG 2013. So honestly, it's been 10 years. It's been 10 years since the market has primarily been led by just a handful of stocks. And there's been some rotation into what those names are, right? Like at certain points, it seemed like Netflix was going out, NVIDIA was going in, though now Netflix has traded really well. Tesla kind of came in. Tesla's potentially out. There's definitely been some rotation of what those best stocks were. And there were some periods of time over the course of the last 10 years where the market was not led by a few stocks, specifically like the 2022 bear market that we had. The strongest sector of that year by far was energy. So energy was the only thing that was really trying to hold the market up, and FANG names were down a huge amount on a percentage basis. But overall, I would say it's actually been more of my career than less of my career, where there's just been a few stocks that have led the market. And I remember people saying in 2022 when we had that bear market, and there's only so much I can argue with people, that whenever you have a bear market, that there becomes a new normal and a new cycle that comes out of it, and it's probably not going to be the old leaders that are the leaders again. And I didn't really ever agree with that. I still to this day think that shorting Apple is almost impossible. It's not impossible. I say that being a little bit dramatic, and obviously there have been times here where Apple's had really, really big pullbacks. Again, just look at the peak to trough moves in 2022 and Apple. Some of them are huge, but until this thing no longer has the success necessary to run a $25 billion quarter buyback, until these stocks are not able to run as basically the monopolies that they are in some ways, and I see no reason politically or anything else that will stop them from being able to be the mammoths that they are. This should be able to last, or could be able to last in some regards for the foreseeable future, which doesn't mean that we're never going to have market corrections or bear markets. like we had the bear market in 2022. I mean, heck, we had a market correction. Did anyone forget? We just had a market correction very recently. We just had a market correction that started in July that went to the end of October. The S&P was down 11%. It's technically a market correction. It's more than halfway to being an official bear market of being down 20%. I think that market corrections on average historically happen every 8 months. They will happen again. It doesn't mean that you have to have a market correction every 8 months. It doesn't mean that you can't have periods that are outside of the historical norm where the market continues to move higher. I mean, I still also can remember 2019. I believe it was 2019. The market went up 30-something% that year, and the biggest pullback the entire year was like 1.5% or some insanity. That there was nothing in that entire calendar year. Just this steady grind higher. That can happen as well. So probably rambling a little bit too much on the answer to your question, but I've certainly seen it before. I don't see any reason why it's necessarily a bad thing, which kind of goes back to Dave's comment earlier. There have been periods of time in the past where this has happened, like with the Nifty 50. You can do your own research on that. I'm not enough of a market historian to give it all to you. And when you think about the way that these companies are structured now, the way that a Microsoft or an Apple is structured, I think it's very hard to take the baton away from them. They just have so much cash. They are able to raise debt at such low amounts that they're literally, in some ways, impossible to compete with unless you come up with some sort of niche product that they eventually say, ooh, we need to either acquire you or build our own, right? Which we've also seen happen so many times. So unless you get government interaction to come in and the government decides, hey, you know what, we finally decided that you can't, own everything under the sun, there's no reason why it should stop. And I think that, we're short-term traders here, day traders and swing traders, where we are able to be successful by, recognizing the July high and capturing the 11% pullback, recognizing the October low and being able to capture this move to the upside. But, if you want to be very big picture as an investor or whatever, and, I would assume that everybody here runs both an active trading portfolio or active trading book or whatever you want to call it, day trading book even, while also having long-term investments. I mean, for years and years now, shout out Jim Cramer, 2013, I've just been dollar cost averaging into what I think are the best companies in the world by just putting in a little bit more money, all the time, maybe almost every month. Like, here's a little more money into my retail account, and guess what I'm buying with that? I'm buying some Apple, I'm buying some Microsoft, I'm buying some SPY, maybe a couple other dividend type names because it's a buy and hold situation. But hope that answers the question, Eli. I'll stop rambling on it. Thanks, Oriel. Mag 7 was from Harnett. Cool. Looks like I got through everything in YouTube for the moment. Popping over to, in the VTF for the moment. Popping over to YouTube. The AI party continues. Gabriel letting us know that NVIDIA went up by almost 1 AMD. Wow, is that accurate? That's insane. I didn't realize that. Apex Joy wants to know what I think about the Expedia daily chart. I don't like it. So it obviously got whacked in earnings. I don't remember what the report looked like, but it must not have been great. It has priced and time corrected and traded up into this gap a little bit, but now these moving averages are caught up to it. I think it'll be difficult for this thing to really clear through like 140, 142. This is not the chart that I want to go after the long side right now. Gabriel in YouTube asking what do you think about XBI. I think XBI looks phenomenal. We've been talking about this XBI consistently since the beginning of February for the $90 breakout. And I remember on February 9th hoping that some people caught this, and then the CPI day might have made it very difficult to hold because the CPI day brought this back below 90 just real quick. And then the market obviously recovered, and now this thing just looks phenomenal again. It's building out a bull flag on top of a bull flag. XBI looks great. It tends to be more correlated with the IWM, but it's outperforming the IWM, so you've got relative strength there. So it's phenomenal. Walter Bloomberg posted that NVIDIA's market cap surpassed the size of Canada's economy. What's Canada got anyway? Hockey and the greatest band of all time, Rush. And Rush doesn't have their drummer anymore, so they don't even have that anymore. What do they got? Maple syrup? Okay, fine. Turkey bacon? Fine. Gabriel asking me in YouTube if I like Owl. It's a private capital company. Look at the weekly too. The recent gap up was earnings. I don't think I'm familiar with this. Blue Owl Capital. Yeah, not familiar with it at all. Chart looks great. Daily chart looks great. Especially since that earnings report. Weekly chart's getting above what looks like all-time highs from back here in 2021. You have an inside week, potential inside week and up for like a 1, 2, 3 play on the weekly chart. Yeah, whatever this thing looks great. You're mentioning it's a slow mover, so that's notable for people who like to trade actively. Robert in YouTube is letting us know that NVIDIA at $804 will give it a $2 trillion market cap. Okay, maybe tomorrow. Maybe tomorrow we'll have NVIDIA $2 trillion. But why not? Let's go for it. All right, so looks like it's another day of firsts and record-breaking moves and record-breaking highs and record-breaking market caps. So hope everyone is enjoying this. This tape has been wild, and there's been a lot of opportunity out there. Honestly, I think on both sides of the market. But this uptrend for this market, for these buys and Qs, is still very much intact. So have a great night, everybody. I'll see you all tomorrow, where it'll be Friday. And guess what Fridays have done recently a lot? Recently, they tend to move up. Have a good night.